from the financial centers of the world, this is Bloomberg Markets with Alix Steel and Guy Johnson.
Friday the 24th, yes, it's Friday, 3 p.m. in London, 10 a.m. in New York, 30 minutes into the trading day in the United States. I'm Guy Johnson in London, Alix Steel is over in New York. Welcome, everybody, to Bloomberg Markets. Alex, what a week it has been. We're not done yet. The president's about to speak. Jerome Powell's about to speak. We're about to get a bunch of data. I don't think we're done yet, and we still don't know about what's happening in China with Evergrande.
Yeah, I was going to say we have about an hour to get any more information on that dollar bond. So here in the U.S., the question becomes, is what we saw in the last few days in terms of an equity rally, was that just a dead cat bounce? Was it just an oversold bounce or something more fundamental? So overall, the S&P is up by 0.1%. But what's up is interesting. You have financials, utilities, and consumer staples and energy all up. You get a little bit of risk, a little bit of safety, and a little bit of dividend players. On the flip side, the move this week has most definitely been in the bond market. Earlier in the week, the bonds really didn't move as equities sold off, but now you're seeing them up about 1 basis point. We're now at the highest level for the 10-year since early July. That obviously helping financials, and the reflation theme is tech. Gets a little heavy here. A guy mentioned it, Bitcoin huge, down by 6%. We don't understand what the rules are with China and Bitcoin yet. We're going to break that down for you over the next couple hours. I just wanted to highlight the gold versus Bitcoin thing. Obviously not moving together. You're going to have a little bit of a safety move into gold, but the divergence of those two I always find quite interesting as we're looking through the headlines, Guy.
Alex, let's talk about what's happening in the housing market in the United States, because we're just getting data on new home sales. Now, we are off the top in terms of the super hot numbers we were getting a few months back, and the data we're getting now is August data. Nevertheless, it still remains relatively elevated. This is an economy that is still cracking on, despite some of the shortages we're seeing. New home sales coming in ahead of expectations and up on the last number. The last number also revised higher. So we got a 740 read, 740,000. The prior 708 revised up to 729. The survey was 715. So the housing market, despite rates starting to creep a little bit higher, and despite some of the shortages we've been seeing, still going very strong at the moment. Maybe what we're seeing as well is, as lumber prices have come off, we're getting a re-acceleration in the new home build sectors. That's going to be something interesting to watch here.
Yeah, that's just you talking about the fact that you really want to have that lumber from Serbia. Really,
it was your so it's interesting actually. What you're saying is quite interesting, because what we're seeing over here in the UK is lumber prices continuing to go up. Lumber prices still remaining very elevated. With you guys, it's started to fade. And what has been happening recently is what the problems you guys are experiencing are crossing the Atlantic, then we're getting them next. That seems to be the trend at the moment. So thank you for that.
Oh, you're welcome. But otherwise, yours is more structural because of Brexit rather than sort of a supply issue. Anyway, Serbian wood. There you go.
Yeah, Siberian larch is what we've been after. Siberian. Okay. Slow-growing Siberian larch. Can't get it. HGV, lorry drivers, truck drivers seem to be the issue. Let's go. We digress. Let's go. Let's move on. Let's talk about what is happening in China, because that's been one of the big stories of the week, of course, hasn't it? China's central bank today rattling the crypto world. The PBOC announcing that all transactions of cryptocurrencies are illegal, effectively banning digital tokens such as Bitcoin. Here with the latest, Bloomberg's commodities and cryptocurrency reporter, Eddie van der Walt. Eddie, let's talk our way through this. The language has been ratcheting up and up from the PBOC. It has. This sounds really tough. This basically sounds like you're done. We're moving on. Is it that?
You know, it sounds really serious. If this is a ban on all transactions, meaning I cannot trade it on exchanges and everything else, then yes, this has got me really worried. And that effectively, as you say, means a ban apart from the ownership, and what are you going to do with it if you can't trade it? But if it just means I cannot transact in the real economy, if it just means I can't buy stuff using Bitcoins, retailers can't accept it. We're still figuring out exactly what it is that they mean. But the direction of travel from the PBOC is clear. They don't like cryptocurrencies. They are going to put the screws on. And I think the market is coming to terms with that effectively you're just not going to be able to count on China.
Yeah, 100, exactly. Eddie, great point. Bloomberg's Eddie van der Walt. And, Guy, counting on China leads us really to Evergrande, because we missed that dollar payment. We still don't know if those investors are going to get paid $83.5 million in interest payments. And I guess you can't trust China is a great lead into that story, Guy, because what do you do if you're a foreign investor? Like, is this a buying opportunity, or are they just really going to be backstopping home buyers and not foreign investors?
So the point you make there, I think, is really interesting, because I think we're starting to understand a little bit about what the capital structure looks like here. Normally, you would think retail would be at the bottom of the capital structure, i.e. if you're a home buyer and the home builder goes bust, you're left high and dry. In this case, it's going to be the exact opposite. It looks like the capital structure is going to have home buyers right up at the top. The authorities are basically saying, you know what? We need to build these houses. Any cash, that's where it goes. So that's really interesting.
Yeah, indeed. And I think that that's going to be the bigger question going forward. So let's get into that with Bloomberg's Tom McKenzie, who's sticking around for us. Hey, Tom, what do we know? What don't we know when it comes to Evergrande, and sort of who's going to wind up getting made whole?
Well, to rehash a phrase from the late Donald Rumsfeld, there are the known unknowns and the known knowns. OK, I think you guys make a really good point, which is one of the knowns now, at least we have more clarity on it, is the hierarchy, as Guy was saying, because we've had reporting that the housing regulators in China are actually looking and scrutinizing the bank accounts of Evergrande to ensure that they prioritize funding for the building of these units. Don't forget, 1.6 million individuals in China have put down deposits on Evergrande properties that are yet to be built, and to ensure the money gets to suppliers. And they want that to be prioritised over other creditors. You can see that and read that as foreign bondholders. We've yet, of course, to get any clarity on that $83 million offshore bond payment. They have now a 30-day, maybe 20-day, 29-day window grace period. So they're going to keep us on tenterhooks when it comes to that. More coupons are due next week as well. So the pressure just increases, but we do know now, it seems, at least from our reporting on the ground, that, as Guy was saying, it's going to be the homeowners and the suppliers, because, of course, they're very concerned, as ever, in China about social unrest.
Absolutely. That cannot happen. Everything else flows from that. Tom, you've had a super long day. We really appreciate you sticking around and updating us on what we know, don't know, and what the unknown unknowns potentially could look like. Bloomberg's Tom McKenzie. Super long day. Greatly appreciated. Let's turn to some of the corporate news that we are focusing on. Nike posting first quarter sales. Nike, I should be probably saying here, missing Wall Street's estimates. What is happening is we're seeing significant supply chain disruptions. It's hobbling the company's efforts to meet strong demand for shoes and athletic wear. What's going to happen as we run up to the holidays? Bloomberg's Ritika Gupta here with the details.
Yeah, Guy, Nike missing its sales estimates, also cutting its full-year growth. We know this is a supply-side story, demand remaining intact, but can that supply meet the demand? Now, this is down to production and shipping delays. In terms of production, the factories in Vietnam being shut down to COVID, that has come, they get about 40% of their output from there, 50% of their footwear sales. So that is a big deal for them. And then also, in terms of shipping, a lot of congestion in those North American ports. We're actually seeing the shipping time increasing or doubling to 80 days. So that is a big wait too. And also, if you look at inventory year over year, pretty much flat. The question is here, is that inventory in transit, and is it going to make it in time for that busy holiday shopping period, Guy?
Yeah, it's looking pretty grim. It's looking like some coal under the tree. Ritika, thanks a lot. I appreciate it. Bloomberg's Ritika Gupta joining us there. We're looking at President Biden right now. He's delivering remarks on the COVID-19 response and vaccination program. Guys, some interesting headlines here. He said the unvaccinated are putting the economy at risk, really trying to drive that home. He does wind up saying, though, that boosters for those who got Pfizer, for those Americans who got Pfizer, can get boosters, which is confusing because from the FDA guidelines and CDC, it's 65 and up. It seems like he's talking about more Americans, so a little bit of confusion that will go through. But booster shots will be available in about 80,000 locations. Moderna and J&J recipients, he says, still have very high protection. Those boosters not available yet. Interesting to see how the markets will wind up interpreting that. Okay, coming up, you got Jill Carey-Hall, Bank of America Securities U.S. equity strategist, joins us on where the opportunities exist in equities. If you have reflation, you want to buy small caps, but that trade really isn't working today. This is Bloomberg.
Tired of trickle down. The trillionaires and billionaires are doing very, very well. You all know it, you've all reported it. And in the middle of this crisis, but hardworking people and middle-class people are getting hurt. And so I provide for example, a tax cut. If you have a child, you get a refundable tax credit. It's reduced hunger in America by 40%, literally for children. You have the whole notion of being able to provide for daycare for your children, getting people back to school, et cetera. It's all paid for. It's all paid for. But a lot of these are flat tax cuts that exist within my proposal. And they're being calculated as if the cost of the child care tax credit is a cost to the government. It's not. It's reducing taxes, not increasing taxes. Now, part of the problem is I had hoped, I hadn't planned on, although I kind of anticipated it might happen, I hadn't planned on the 178-mile top winds, hurricanes going to Louisiana and 20 inches of rain in New York and New Jersey and an area as big as the state of New Jersey burning down in the west. And so what I had hoped I would be doing, I'd do what I did in the campaign. I'd be out making the case about what my plan contained. And it's been very much curtailed by a whole range of things. And so I think that it's understandable. I think it's understandable, people being frustrated. I think they're frustrated as well by the fact that not just members of Congress, Democrats and Republicans, frustrated by, I thought this was going to be better. I thought everything was working out. We were moving along on COVID-19, and now we have all these people who refuse to get a shot. And now look at the people dying, large numbers of people dying. So I think it's a totally obviously it's a legitimate question you've asked, but I think putting it in context here, it's going to take some time here. And I know I always kid you when you all ask me about, well, what about, are you going to get A done, B done, C done? Well, I say, you want to negotiate. I'm being a bit facetious, obviously, but here's the deal. This is going to end up, I believe, we're going to end up getting both the pieces of my economic legislation. The first piece, the 1.9, fundamentally changed the structure and the nature of the economy in this country. Even though, remember, it got clobbered. It was this terrible thing, no Republican voted for it. Well, we got real economic growth. Now we're at this stalemate at the moment, and we're going to have to get these two pieces of legislation passed. Both need to be passed, and they'll have a profound impact, according to not Joe Biden, but according to Wall Street, according to the IMF, according to international organizations. And then there's, I'm going to be having a meeting today with the Quad, with the leader of India, Japan, and Australia, and we're going to be talking about Afghanistan, which is a legitimate thing for people to talk about. But the truth of the matter is, the end of the day is, we were spending $300 million a day for 20 years. There was no easy way to end that. And we're now still getting people out, but it's really, there's no picture book way to say, okay, the war's ended, let's get everybody out and we'll go home. No war's ever ended that way, other than there's been a surrender and it's a totally different circumstance. So anyway, there's a lot, I'm sure, along the line that there are things I could have done better, but I make no apologies for my proposals, how I'm proceeding, and why I think by the end of the year we're going to be in a very different place.
Just to follow up on COVID, if I can quickly,
Sure.
What do you say to Americans who disregard the new CDC guidance and get a booster shot anyway?
Well, I'm not sure how they get it, but
There are people who go into stores right now and just have got it without any high-risk situation or underneath that age limit. It happens around the country as we speak.
Well, I think what's going to happen is you're going to see that in the near term, we're probably going to open this up anyway. They're constantly we're looking at both Moderna and J&J, and we're both, as I said in the speech. In addition to that, we're also looking to the time when we're going to be able to expand the booster shots basically across the board. So I would just say it'd be better to wait your turn in line, wait your turn, and to get there. Ken.
Thank you, Mr. President. When you met with congressional leaders this week, you told them to try to find a number less than $3.5 trillion on the reconciliation package that they could live with. What is that top line number in your mind as you deliberate these considerations? And then separately, you mentioned how you're going to pay for some of these provisions. Senator Wyden has a proposal on annual taxes on billionaires' unrealized gains. Is that a proposal that you support?
Yes, I do. Look, I support a lot of these proposals. We don't need all the things I support to pay for this, but I do support that. Look, if you file with a W-2 form, the IRS has access to your bank account, and your bank tells you how much you made, what you have in there, and they estimate your tax. Well, if you have no income, if you have no earned income, and it's all investment income, it's hard to figure out what the heck you have. And that's why we have to, and I know some people don't like this, that's why we have to rehire some IRS agents, and not to do anything, not to try to make people pay something they don't know, just say, hey, step up and pay like everybody else does. Look, I really mean this. And you look at my whole career, and I come from the corporate state of America. I just think it's about just paying your fair share, for Lord's sake. Now, we can argue whether or not the corporate tax should go back up to 26.5% or 28 or 24, but the idea that 50 major corporations in America making a sum total of $40 billion pay zero? Come on, it's just wrong. It's just not fair. And I think it's beginning to sink through the ether a little bit here on the part of people. So I think there clearly is enough from a panoply of options to pay for whatever it is that folks decide to pay for. And let me finish by answering the initial part of your question, if I may. The way I look at it is what I've been telling my colleagues, and it surprises them sometimes when we're in those rooms. And I don't know whether you heard, but both meetings went very well. I mean, they were collegial. No one's hollering. Everybody's, and people were hanging out afterwards in the Oval. And anyway, both the progressives as well as the moderates. And one of the things that I think is important and I'm trying to get people to focus on, is what is it you like? What do you think we should, don't forget a number. What do you think we should be doing? Is it appropriate, in your view, to cut taxes for working class people by providing for daycare, providing for early education, 3 and 4 years old? Is it appropriate to do something about free community college, or do you want to means test it? I'm telling them, what are your priorities? And several of them, when they go through their priorities, it adds up to a number higher than they said they were for. Because I think this is, we're getting down to the hard spot here. People are having now to go in and look in detail as to what it is specifically they're for. It's a little bit like when we went through, and I'll end with this, it's a little bit like when we went through the issue of the bipartisan deal on infrastructure. There were a lot of negotiations on that. And it wasn't until people were forced to look at, what are you for? Are you for taking care of that highway or bridge in your state or that region or your region? Are you for doing something about environmental degradation? Are you for something that deals with allowing us to provide for monies to states so that they can, in fact, deal with things like what happened in states where the major utility lines come down? What do you do to build those back better, to prevent that from happening? And it's sort of and you all speak to all these folks, so you speak to as many as I do. I find that they're going, I never really thought that through before. I think it makes sense. And that's how we finally got to a bipartisan deal on what is a serious infrastructure proposal that really does a number of things, including things when people said, I don't want to do anything in the environment. Then they start thinking, well, wait a minute, I have all these diesel buses at home. It would be a hell of a lot better if we had electric buses. It would change the circumstance on boom, boom, boom. So I think this is a process. That's why I said at the front end that although we got off to a very fast start with the first piece of legislation, I don't expect this to be done and us being in a position where we can look back and say, okay, did we get it done? Until basically the end of the year. I don't mean the vote on the two pieces of legislation relating to the economy, but I think it's just going to take some time. And look, you know, my guess is we all come from similar backgrounds. Remember you used to sit around the table, kitchen table in the morning, if you had the chance to do that, or a dinner at night with your mom and dad and your brothers and sisters? What did people talk about? They talked about, you know, are we going to be able to pay the mortgage? At least my house. I mean, what's going to happen if we have another one of those floods and it, you know, blows through here like it did in Queens? What's going to happen? Well, what are we going to do? By the way, I'm just not sure that I want, you know, my son or daughter to be going into school when so many people are not vaccinated. I mean, you know, it's just, you know, I'm not sure I want Kenny to be there doing this, but these are practical things people are talking about. And they're looking down the road and they're looking at cost of living issues as well. And so what's the cost of living issues? Well, it's because we're in a position where the ability to have the product, the elements of the production of a product that in fact need to go into the production of that product are hard to get a hold of because people are in trouble. They're not able to produce them. They're not able to get it, or they're being hoarded. It's like, you know, what we have with, and we're making progress, but like what we're doing with regard to making sure we have the computer chips to be able to keep, as in the vernacular, to keep, you know, build automobiles. I mean, I think everybody was kind of surprised when I think if I had said to you, I may be dead wrong, but if I had said to you in, say, April, that I was going to get all three major manufacturers of American automobiles saying they're going to go electric, I doubt whether you thought that could be done. Well, we're out here in the back lawn. They've all of a sudden figured it out. They've had a bit of an epiphany. And they've realized, whoa, wait a minute, man. China's investing billions of dollars. China is getting battery technology. We're going to build blah, blah. And this is going to happen anyway. And again, I'll just conclude by saying this is a process. And it's going to be up and down. That's why I don't look at the polls. Not a joke. Because it's going to go up and it's going to go down, it's going to go up. And hopefully at the end of the day, I'll be able to deliver on what I said I would do. One, bringing the country together on a few and very important things like on infrastructure. Getting us in a position where we can have some coherent policy relative to foreign policy where there's agreement. Moving us in a position where we're able to actually generate the kind of change in the dynamic of how we grow the economy. Not eliminate the super wealthy, not at all, but allow the working class and the middle class to be able to build out and up. And that can be done. And like I said, every time I hear, and I drive my staff crazy, every time I hear this is going to cost A, B, C, or D, the truth is, based on the commitment that I made, it's going to cost nothing because we're going to raise the revenue to pay for the things we're talking about. And we're going to give, and right now, if you take a look at the reconciliation piece, $1 trillion of that is the tax cuts. Not raising anybody's taxes, it's tax cuts. People can be paying less taxes, but the people paying less taxes are going to be working class folks. It's going to put women back to work is to put people in situations where they have, as I know you're tired of hearing me saying, but my dad's constant refrain, just give people a little breathing room. A little breathing room. Thank you, guys. Appreciate it.
You've been listening to President Biden delivering remarks on the COVID-19 response and vaccination program. Then he also moved to infrastructure and helping the middle and working class as well. He did discuss the fact that he spoke with House Speaker Nancy Pelosi and Senate Majority Leader Chuck Schumer earlier on infrastructure. He said that the talks are pretty cordial, that he made an idea that all sides are kind of getting together and hashing out issues. He made it seem kind of happier than I would suspect it probably is, Guy, but clearly he's not backing down from that $3.5 trillion so far, and clearly is going to spend political capital to get that $1.2 trillion infrastructure passed as well.
Absolutely. That is his clear focus. The other clear focus is on getting people vaccinated. He says that those that aren't are holding the economy back. He may have a point here. You look at what is happening on the supply side of the U.S. economy, the global economy. Clearly, we have a supply side problem here in the UK, over in the United States. That is both a material shortage story, but also a people shortage. And that is manifesting itself in potentially slower growth. And Alex, that's where I think he's focusing his attention. He says it's doing economic damage if you're not getting vaccinated, but this has become so politicized.
So politicized. I also think it's interesting that he was of the mindset in the White House that they wanted boosters for all the population. The CDC and the FDA said specifically 65 and over. But again, he said that he thinks we'll get to the point where everyone does get a booster. That's in contrast to what the scientists are saying. So I'm interested to see how that kind of spins and plays out as well.
Yeah, he doesn't want it to be a free-for-all, which is interesting as well. He basically telling people to get in line because that hasn't been the narrative recently.
Some places, real quick, some places you can literally go in and they'll just jab you. Like, you don't need to show. Now, I'm saying everywhere. I'm saying there's a lot of places like that right now. Crazy.
That's a failure of data, though. I wonder whether or not ultimately that gets resolved. Just kind of the record keeping and necessary to figure out exactly who's had what. I think if you're in a world where you want to travel around a lot, I think that record keeping is going to be critical. Jill Carey-Hall, Bank of America Securities, U.S. equity strategist, joining us now. You've got a year-end target of 4,250 for the S&P, 4,600 for next year. Did anything you just heard from the president give you confidence that we're going to continue to see an economy that continues to grow? He talked about taxes. He talked about what is happening with the virus. Does any of that resonate in the market right now, or has the market moved on from those issues?
Thanks. Yeah, I think there's a couple of those issues will certainly be important to the markets. I mean, we've been cautious on the level of the S&P 500 from here, just given how bullish equity sentiment has been, how extended valuations are. The S&P 500 is obviously also very concentrated in a small proportion of very large mega cap growth stocks. The benchmark's grown a lot more interest rate sensitive. So obviously, if rates are more likely to go higher than lower from here, that's a risk as well. I do think that infrastructure is going to be an important theme within the market, even though we've been more cautious on the S&P 500. One of the themes that we like is smaller, more domestically focused companies. And if we see a CapEx cycle in the U.S., if we see infrastructure, if we see reshoring of U.S. manufacturing, that should benefit a lot of more domestically focused smaller companies. And certainly COVID and the trajectory will be a big theme. Small versus large caps, value versus growth. Their performance has been correlated with COVID cases. But overall, we do expect a strong U.S. economic backdrop. And we think that the two ways that you want to invest within equities right now are small over large and also looking for inflation protected yield.
So Jill, let's break down the small cap for a second. So the way I understand it, if you have reflation, that's usually good for small caps. But if we have a big re-rating in the bond market, if that trickles down to the corporate credit market, that could hurt small caps. If you have stimulus, good for small caps. If you wind up having higher taxes, bad for small caps. How do you weigh the risk reward in that?
Right. Yeah. I mean, I think, taxes are certainly a risk for overall earnings. Could potentially be a bit of a mixed impact because the domestic tax rate could obviously impact a lot of the smaller domestically focused companies. But if you see other provisions that are focused on larger multinationals, obviously that could be a detractor to the earnings of those companies as well. I think from a credit conditions perspective, things still look supportive, but that's something to watch. I think another thing that we're looking at for small versus large caps is that, for long-term investors and thinking about, asset allocation, valuation overall doesn't tend to be very predictive of market returns over the short term, but it does tend to be very predictive over the long term. And if you have, a 10-year time horizon, what market multiples are today tends to matter a lot for what returns have been going forward historically. And for the S&P 500 large cap index, returns right now based on our frameworks are suggesting that we could see actually slightly negative annualized returns for the S&P 500 over the next 10 years. Whereas for small caps, relatively inexpensive valuations versus larger companies are suggesting that you could see positive returns over the next decade. So, I think obviously there are some potential near-term risks, but overall we do see this as a supportive backdrop for small over large caps, given both the economic themes that we've mentioned as well as just the long-term valuation story.
Can we talk a little bit about the supply chain story and how it's going to impact big cap, small cap? Nike is emblematic, I think, of the problems that large multinational companies may be experiencing in terms of long supply chains and just trying to get stuff from one part of the world to the other, trying to deal with local outbreaks of COVID that they've been experiencing, for instance, in Vietnam, which has hit production. Are small caps more protected from that? Are domestic small caps more protected from that? Or are they just going to have different supply chain issues? It's not going to affect them sort of directly, but what they're going to have is they can't buy the stuff that they need to finish that product. Can you kind of walk me through how the supply chain overlay fits onto the large cap, small cap debate?
Mm-hmm. Yeah, I mean, I think, you have, as you alluded to, you have seen a number of large cap multinationals, warn on supply chain issues. And this is one of the reasons that, we do see some risk to earnings going forward from a lot of these issues. And you've started to see the ratio of above consensus to below consensus guidance for the S&P 500 tick down, even though it's still above average. So potential risks to earnings revisions going forward. Margin risks from, both just peak globalization as well as inflation and some of the issues you're seeing. I think for small caps, obviously, given they are more domestic, this is something that, we do see as a relative benefit in this backdrop, whether it's in relation to things going on in China or, given the pressures that we've seen within the market. But certainly they're not insulated. A lot of small caps, as we saw during the trade tensions of a few years ago, are suppliers to big multinationals and did get hurt during the trade backdrop. So, the greater foreign sales exposure of large caps has made them more vulnerable, but certainly small caps aren't, completely insulated, even though they're more domestic.
Sure. So, Jill, before we let you go, within small caps, I wonder how strong your inclination would be towards like the cyclicals and the value versus the technology, like the whole value versus growth debate on a small cap level.
Mm-hmm. Yeah, I mean, I think from a small cap perspective, certainly some of the areas that are more cyclical and beneficiaries of if we do see, Delta variant wane, continued reopening, recovery trends continue. A lot of the more cyclical areas have been what ranks well within our work right now in terms of, consumer is one sector that's looked a bit more favorable in small caps than large caps. Some of the inflation and commodity sensitive cyclical sectors, industrials, materials, energy, even real estate have generally ranked well within our work. And a lot of these cyclical areas have not really priced in the recovery. So they're still trading at a relative discount. But, I think overall we've seen that, value has worked well within small caps this year. The small cap, as of last month end, the small cap value index was actually the best performing of all the size and style benchmarks. So, I think as we move later in the cycle, it makes sense to shift, toward quality value,
Yeah.
and quality is one of the typically the best performing attributes as you move more into a later cycle environment.
Jill, we're going to leave you there. Thank you for your patience. Thank you for your time. We greatly appreciate both. Jill Carey-Hall of Bank of America Securities. Greatly appreciated. Bit of news. It's being reported by Dow Jones that Huawei CFO Meng Wanzhou has now reached a deal with the DOJ that would return her to China. This would potentially, Alex, go a long way in certain areas to diffuse tension between Beijing and Washington if this is the case. It's being reported by Dow Jones, as I say, but this has been a huge thorn in the side of the relationship over the last few months and years.
Yeah, particularly interesting also as the U.S. And China are trying to sort of get together more when it comes to climate. But then on the military side, the operations with the deal with Australia and the U.K. in terms of those nuclear submarines, that is a little bit more tense. So you have sort of both. You have this is the olive branch. Maybe we can work together on certain things, but still that hard line when it comes to that militarization issue.
Yeah, and China's big on linkage, so these issues all do relate to each other and fit together. The other thing that we should be mentioning when it comes to China is what's been happening with Bitcoin, Alex, taking a beating today after that news that we got from the PBOC a little bit earlier on that it's banning all cryptocurrency transactions, vowing once again to crack down on illegal crypto mining. What does it mean for the future of crypto? Joining us now, Grayscale Investments CEO Michael Sonnenstein. Michael, what did you make of the news, first of all? There does seem to be some ambiguity in terms of what the word transaction means, but it does fit a pattern of China cracking down.
Thanks for having me. I mean, the Grayscale view on these issues that we've looked at for the past 8 years is really seeing no shortage of both prohibitive and accommodative stances from state actors like China looking at digital currencies like Bitcoin. I think time and again, we've seen these challenges come up. In some instances, it's been about trading and the digital currency exchanges in places like China. In other times, it's been things like mining and the activities that go into controlling the Bitcoin network. And each time we've seen this challenge come up or a more prohibitive stance come up, we've seen truly the resiliency of the community around digital assets. And that exchange volume has moved to other geographies, and that mining concentration has also moved into other geographies and has actually had an opportunity to even move to some more sustainable mining methodologies.
Sure,
so
but
no surprise here.
But Michael, as of April, and I realized that was April, China had about 46% share of the global hash rate, and that's basically the computer power used in mining and processing. If all of that was shut down, and you couldn't trade, and you couldn't buy stuff with it, I mean, it's really hard to see that contained. How does that not put a big dark cloud on the overall crypto space for a while?
It's really, again, about resiliency. That is all moved elsewhere. We've seen now some of the largest mining pools and, again, hash rate move into places like North America. And as the conversation has heated up around challenging the Bitcoin mining industry to move towards renewable energy sources, that has become a top priority for many of those mining operations.
But I guess the wider point here is that while you can shift operations out of China, you are looking at one of the world's biggest economies that is basically saying no. That at some point must reduce the number of available participants in this Bitcoin process, in the crypto process, significantly. And I'm wondering at what point that starts to have a meaningful impact on prices. What the Chinese authorities are saying, and I don't understand what transaction means, but it's basically saying anybody outside China is not allowed to transact with anybody inside China. So basically, foreign exchanges, etc., cannot deal with China anymore. If that is the case, we're basically walling off a huge part of the available universe.
I think that this is no different than the way that we've seen the Chinese take certain stances on internet accessibility and news. And typically, when those types of policies are implemented, you see that the Chinese nationals, that their behavior really goes into using other methods to do, to have the ability to gain exposure to those avenues that have been prohibited. Now, in the case of Bitcoin and the digital currency ecosystem, This is a worldwide adoption that we're really seeing. And so the adoption rates just in China, while that certainly was a meaningful part of the ecosystem at one point, now that has really moved around the world. You're seeing massive adoption in sub-Saharan Africa, all over Southeast Asia, North America. It's not just the developed world, but actually the developing world is becoming a really important component of the ecosystem at large.
Okay, so then based on that, the sentiment's still pretty gloomy today. You had, say, Coinbase Global, the debut junk bond sale fell to some fresh lows. Like, what do you buy on a day like today?
Well, I would say that typically on days when the headlines put pressure on crypto prices, our investors are using those opportunities to buy those pullbacks. If their conviction in the asset class hasn't changed, but they can suddenly buy the same asset for 5, maybe 10% cheaper than they could even 24 hours ago, then that's something a lot of investors are doing to put more money to work. And I think that especially because the ecosystem has evolved so much, we're now seeing investors move beyond assets like Bitcoin and Ethereum and looking at some of these other subsets of digital currency ecosystems that may resonate with them. And that could be DeFi, it could be privacy, it could be gaming, the list goes on and on, but certainly a trend towards diversification and looking at these pullbacks opportunistically.
All right, Michael, thanks a lot. Really appreciate it. Michael Schonenstein, Grayscale Investments CEO. Good to have you on a day like today. We appreciate it. All right, coming up, Bilal Khan, Blackstone Senior Managing Director, will join us to talk about the U.S. power crunch and how to protect the national grid from extreme weather. You just heard President Biden talk about just that and why the infrastructure bill going through Congress is so important. We'll break down the opportunities. This is Bloomberg.
This is Bloomberg Markets. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, the former U.S. ambassador to Germany, John Christian Komblin. That's at 1:30 p.m. in New York, 6:30 p.m. in London. This is Bloomberg.
And that's how we finally got to a bipartisan deal on what is a serious infrastructure proposal that really does a number of things, including things when people said, I don't want to do anything in the environment. Then they start thinking, well, wait a minute, I have all these diesel buses at home. It would be a hell of a lot better if we had electric buses. It would change the circumstance and boom, boom, boom. So I think this is a process.
That was President Biden earlier this hour on the massive infrastructure bill still stuck in Congress. And infrastructure is critical to the power grid. You get a lot of private and public solutions, and money are going to be needed to protect the power grid and energy from crazy weather events like what we saw in Texas in the winter, what we're seeing right now in the UK, as well as in Europe with record high power prices. Now, Blackstone in particular is trying to do its part. TDI is one of the portfolio companies under Blackstone and is building a transmission line that's going to deliver hydropower from Hydro-Quebec to New York City. It has taken 10 years, though, to get approval for the 339-mile pipe. But the idea is if the wind and solar aren't working, hydropower can help fill that gap. Joining me now is the man behind that deal, Bilal Khan, Senior Managing Director. Bilal, perfect timing here. Thanks for joining.
Alex, thanks for having me on.
So 10 years is a long time. What's the project? How long does it take? What's it going to do for New York City?
Yeah, sure. So we're thrilled to be part of New York City's cleaner, carbon-free future. The project is 1,250 megawatts, and just to put that into perspective, that's just over 20% of New York City's average daily power use. It removes 3.9 million metric tons of carbon dioxide, which again is equivalent to removing 44% of the vehicles off of New York City streets, and we're doing 1,400 union jobs to build this transmission line.
So why hydropower? So what we saw in the UK, for example, is the wind just stopped blowing. Therefore, the wind power was kind of stuck, and they couldn't get the natural gas because there was a pipe, basically, or a power cable that broke.
Yeah.
Why does hydropower help fix that problem, for example?
Well, hydropower is perfect because for when the wind's not blowing and the sun's not shining, you've got hydro that's available 24 hours of the day, 7 days of the week, around the clock. And so our perspective was we shouldn't be using thermal power when the wind's not blowing, the sun's not shining. Let's use renewable hydropower. And that was part of the thesis in developing this project.
To be fair, actually, we are doing the same thing in the UK. We're about to open a huge interconnector up to Norway. Norway, a huge source of hydropower as well. But it doesn't seem this whole process is moving fast enough. And Bilal, the problem we face here in the UK is that we're looking to turn off nuclear, we're looking to turn off coal, we're looking to even turn off gas, which we're now experiencing shortages of. Are we moving too quickly in turning off legacy energy assets before we have enough of what you've been building and what I'm talking about with the interconnector to Norway?
No, not at all. I think we have to be very thoughtful about the transition. And really, the energy transition is going to require all types of renewable resources. It's going to require hydro, wind, solar, and batteries. And that's something that we're very excited about.
So we're talking about how the wind will stop blowing and the sun won't shine. What if there's a drought? Like, what if the water dries up, for example?
Yeah, well, we're very lucky with our partners in Hydro-Quebec. And even when there has been a drought, Alex, Hydro-Quebec has still had excess power. And just to account for that contingency, Hydro-Quebec has committed to build another 1,400 megawatts of new wind for just in case there is a drought. But we're lucky to have a partner with Hydro-Quebec.
In terms of what we're going to need in the mix, do you think nuclear ends up in the mix? I'm curious, when you think about all of these interconnectors, the idea is that everything kind of ultimately does work because at some point one of these elements is going to be functioning. But do we need a base load behind all of that, do you think, Bilal?
Absolutely, absolutely. And hydro and nuclear are really attractive sources of baseload renewable energy. And I think over time, we're watching this very closely. Battery storage is going to develop to be longer duration, such that you do have a full baseload power. To achieve the climate objectives that we've all put out, you're going to need every type of renewable resource.
You guys can make different types of investments, either through your credit arm or private equity arm, for example. Can you give me some perspective of how much money you're going to be committing to the renewable space and where you're going to be putting it?
Sure. So sustainability is a mega theme at Blackstone, and we're very excited. We've invested in $11 billion of companies just over the last 3 years. And just as perspective, we've invested in energy storage, as I mentioned earlier, energy efficiency. We're also investing in emissions tracking software. So we're really excited, and we're looking at first derivative themes to invest in the broader transition.
In terms of the rate of return off this stuff, how does the IRR on one of these projects compare with a traditional energy investment?
Well, Guy, we're a private equity fund, so we're going for a private equity return. What's great about Blackstone is we have lots of different pockets of capital. So we can pursue this through our infrastructure fund, our credit fund. And so again, sustainability at the firm, mega theme, lots of ways for us to play it, and we're absolutely doing that.
Just ending where we started off, in terms of President Biden calling for more energy infrastructure, et cetera. It took you 10 years to be able to get this done. Do you think that timeline is going to be sped up if there's more support from DC? I mean, everyone's throwing money at renewables, but there's this huge infrastructure problem, and it's not an easy fix.
Absolutely. I think it'll be really helpful. And why did it take us 10 years? Because we wanted to be really thoughtful about the development process that we took. We engaged with environmental stakeholders, communities, all of the organizations that are going to be impacted by this. We engaged with all of them, and that's a really long process.
Yeah, 10 years. Well, congrats. It's a great project. I live in New York, obviously, so I'm looking forward to that. Bilal, thank you for your time. Bilal Khan, Blackstone Senior Managing Director. This is Bloomberg. Every Friday when Guy and I are here, we're going to highlight our favorite chart of the week. And this is mine. This is year-over-year price changes from the week that ended September 12th. And it's huge. I mean, talk about inflationary impulses, Guy. Sports drink prices up 20%. Breakfast meats 18%. Fresh eggs up 17%. We may call it transitory, but this really hurts. And how long it's going to be until we get those sports drinks back if you're looking at things like freight rates, labor shortages, COVID issues, and actual supply problems.
Yeah, I'm not sure sports drinks are a necessity. Some people may argue differently.
Fresh
but
eggs,
nevertheless,
cold meat.
Precisely. That kind of stuff is a necessity. That's not discretionary. And therefore, the ripple effect into discretionary is something you want to pay attention to. My chart speaks to the upcoming COP26 meeting. It speaks to the German election this weekend. And a divergence that seems a little odd, considering those events coming up. So in the white line, the European Renewable Energy Index, as you can see, it is underperforming the MSCI Europe ESG Leaders Index. And that sounds a little counterintuitive, doesn't it? We've just been hearing about the huge amounts of money that are flowing into sustainable energy sources. You would have thought that the renewable index would be doing a lot better than maybe the ESG index. It's not the case. The ESG index, ASML, Roche, AstraZeneca, Novo Nordisk, SAP, i.e. tech and healthcare. Renewables are underperforming. German election coming up this weekend. The Greens are potentially going to be part of the next government. COP26 coming up, Alex.
But that's also going to be a supply issue too, because you need things like aluminum and metals in order to make all that stuff too, like a wind turbine. So it all goes back to the supply shortage.
It does. And the need for an energy transition. Anyway, coming up, the European close. Plenty to talk about there. That's coming up next. This is Bloomberg.